Hi everyone, it's Carla from Cycle CPA. We do anything from bookkeeping to CFO services for the green industry. And today I'm going to tell you 6 tips on how to manage cash flow. Now, this is a major topic, not just for the green industry, but for all businesses in general. According to a US bank study, 82% of businesses fail due to cash flow management issues. And so if there's anything that you want to focus in on within your business and having it as a top priority, it's definitely cash flow management. So starting off with a basic concept first before I get into the tips is you want to make sure that you have your cash inflows matching up with your cash outflows. So cash inflows could be revenues, right? That's going to be your main source of cash inflows into the bank account. It could be owners' contributions. I know a lot of owners don't want to, think about having to pump their own money into the bank, but it could be a source, right? And then also loans that you get from other investors or banks or anything like that. So those are your 3 major ones that you're going to have within the cash inflows. And then you have cash outflows, right? Many cash outflows. So you have your direct costs, which are your materials, labor, etc., and then your overhead costs. And then the third category are your balance sheet items. So things that are not on your profit and loss, but still get deducted out of your bank account. So think about your truck payments, any loan repayments that you're making, your sales tax payments, things of that nature. So you want your cash inflow, so your revenues and to match the same period as your cash outflows. And although this sounds simple, it's very hard to do, right? Because within the green industry, especially if you're doing install or design build, a lot of the times that's not happening because you may get a large job that you're doing. You're only receiving a portion of it up front of the money, but you're outlaying a lot of cash due to material costs and your field labor costs, right? And so this is where these tips come into play in trying to very strategically manage that cash while you have it on hand. So my first tip would be have multiple bank accounts. Now, if you're someone who's just starting off, I wouldn't recommend opening 5 bank accounts right away because it's going to get too hard to manage. So at least open 2 to 3 to start off with, and keep one for operating expenses and then another one for like savings. So the one that is going to be a savings account, really, that's the ones that you're going to store the like upfront deposits for larger jobs, and then the operating ones are just going to cover your daily expenses. And then when you start graduating to 3 or 4, 5 bank accounts, then you'll want to split those up into different categories, such as maybe you're saving up for a truck down payment, or you want to store your sales tax payments in a separate bank account until you have to actually pay the state on a monthly or quarterly basis. So start off really simple at first with 2 or 3, and then you can graduate to other ones. Again, as a busy business owner, you're not going to have a lot of time to manage a lot up front, so the simpler the better. So going into my second tip here is leveraging your credit cards, line of credits, and trade credits. And so the basic concept with all of these is that you're getting to buy something upfront, such as materials or other expenses up front that you don't have to have a cash outlay though for it just yet. So you get the benefit of having your materials ahead of time, but you don't have to pay for it until 15, 30, 60 days. So that's going to buy you some time in between, having that cash outlay. So For example, if you're doing this with a credit card, so a credit card you have to pay back each month, right? We have to be responsible with a credit card. You're going to pay that back each month, but again, it's 30 days, right? So if you put a lot of the, if you have someone who's going to pay you in 30 days and you put a lot of the expenses for that project on a credit card, then the cash inflows in 30 days is going to match the outflow when you pay off that credit card. Let's say that it's a big landscape construction job or design build job, then that's when you'll want to graduate into more of using a line of credit, again, in a responsible manner where you're going to pay it back. So a line of credit is good for having different expenses on there, such as maybe you use it for your payroll costs for 1 or 2 periods, materials, and again, having the line of credit open so that you can cover those expenses, so that in the next month when you get the cash, you're receiving the cash in from certain projects, and then you're paying out that line of credit. The line of credit is good because you only use what you need at a time. It's not like a loan where, okay, you're locked into $100,000 loan when you don't need $100,000, right? So you can draw on a line of credit whenever it is needed. And then lastly, trade credits. Trade credits are kind of like a line of credit or credit card that you establish with certain vendors. So maybe I know a lot of green industry business owners establish trade credits with SiteOne, where you or your staff can go into and buy your materials, equipment, things of that nature, and then you don't have to pay it for another 15 or 30 days. So leveraging your trade credits to match your cash inflows as well. Tip number 3 is leveraging your vendor relationships. So this is something where it's not going to work as fast, like such as leveraging credit cards or line of credits. It's something that you have to work at, and it is going to take time to establish some of these relationships with your vendors. Once you establish a long-lasting relationship with your vendors, then you could ask them for certain things. So maybe if you ask them to extend your terms with them, so maybe at first they give you 15-day terms. Once you leverage that relationship with them, you can ask for 30 or 45-day terms. The reason why I say that this takes time is because put yourself in their shoes. If you're asking them up front for extended terms, they're not going to probably do that for you because they don't know you. They don't know that you're going to pay them back during that time, right? But once you establish that you're a responsible person, you're going to pay them back on time on the 15th, the full amount, then they get to know you and know that you're responsible, and so you can ask for these things later on. And if you get to know the vendor and you get to know them, and if you sense that they'll never have these flexible terms with you, they're just a strict kind of vendor that won't have any flexibility with that, I would recommend looking around for other vendors that are more flexible for you and that you're able to establish that relationship with them eventually. Because it's not, it is going to be a win-win situation, because if you're able to have that flexibility with the trade credit, then you're going to be able to have more of those jobs and you're going to provide more business to that vendor at the end of the day. So you want to find a vendor who's going to be flexible with you. My fourth tip is to establish a late payment fees for those customers who are, continuing to pay late. Maybe you have a client who, they're supposed to pay within 30 days, but they always pay you within 40 or 50, 60 days. You want to establish a 2 to 3% late payment fee on there, and that's, based on the industry average on late payment fees. This will encourage them to pay on time, and if they do pay late, you're charging them for that extra cost, right? Because at the end of the day, you're not a bank. You're not in, the business of loaning people money. There's a cost of capital, especially right now, and so you're entitled to that percentage. My fifth tip would be creating a recurring cash flow base. So, for example, establishing more maintenance contracts. The maintenance contracts could be up to 12 months, right? That is creating a predictable cash inflow into your bank account. So the more that you build up that foundation, the better that you'll be, because there's a certain amount of fixed costs within your business. You have rent, you have marketing, advertising, office employees, and whether you're making a sale or not, you're going to have those fixed costs. So at least building up a recurring maintenance contract base where you're able to cover those costs twice over for 2 months. And then maybe getting into the larger projects that require more work upfront, more cash upfront, like a design build project, install projects, things of that nature. And it, I say maintenance, but it doesn't have to be maintenance. I have a client who they do design build services, and decided to sell designs online that anyone can download, and now has built up that, client base online as well. It's just kind of getting creative with how you add value as well within your services and establishing that recurring cash flow base. Number 6 would be to create a cash flow forecast. And we have a lot of videos on this on our YouTube channel and how to create one. But basically, QuickBooks has a free download that you can do, or you can, start with an Excel sheet, pen, paper, however you want. But creating a cash flow forecast and, projecting your future cash inflows and outflows, and therefore projecting your ending balance in your business bank account. Being proactive and creating a forecast is going to put you ahead of the game of any other business owners, and just penciling in or using an Excel sheet whenever you're going to add another overhead cost. It's kind of like keeping a check register, like back in the day when you used to balance your checkbook. Same thing, but with forecasted numbers, right? And so just when you're creating a forecast, it also allows you to see where you may have a cash flow crunch, and you're able to plan for that ahead of time. All right, if any of you guys have any questions on these tips or have any other video suggestions, please let me know. Feel free to contact me at carlap@cyclecpa.com. Have a nice rest of your day.